Hello peoples, welcome to my YouTube channel Knowledge Raj King. Today I am going to tell you about the share market. So let's start. What is share market? A market where shares are publicly issued and traded is known as a share market. The answer to, what is stock market, is pretty similar to that of a share market. The key difference between share markets and stock markets is that the former only allows one to trade shares. The latter allows you to trade in financial instruments such as derivatives, bonds, mutual funds, as well as the shares of listed companies. The key factor is that the basic platform offers trading facilities that companies can use to trade stocks in the stock market. On a stock exchange, one can only buy and sell those stocks that are listed on it. Hence, buyers and sellers meet on a stock market. India's prime stock exchanges are the National Stock Exchange and the Bombay Stock Exchange. Types of share markets. Now that we understand the stock market meaning, one key aspect of stock market basics is that one can trade on one of two market segments. In other words, there are two types of share markets in India. These are primary markets and secondary markets. Number 1. Primary share markets. A primary share market is a place where a company first gets registered with the goal of raising money and issues a certain amount of shares. The goal of being publicly listed on a primary stock exchange is to raise money. This is where a company gets registered to issue a certain amount of shares and raise money. If the company decides to sell its shares for the first time, this is known as an initial public offering. Number 2. Secondary market. Once a company's new securities have been sold in the primary market, they are then traded in the secondary stock market. On the secondary market, investors get the opportunity to exit their investment and sell off their shares. Transactions on the secondary market mostly comprise trades where one investor chooses to buy shares from a separate investor at the prevailing market price. Based on whatever prices the two parties agree to set or the prevailing market price, one investor will buy shares from another on a secondary market. Typically, investors conduct these transactions through a broker or other such intermediary who can facilitate this process. Brokers offer these trading opportunities at different plans. How does the stock market work? A stock market is a platform where you can invest in a wide range of financial instruments, including shares, bonds, futures and derivatives. Whatever your preferred choice of instrument, stock markets enable the transaction. How to invest money in share market. Always wondered how to invest in shares as a beginner? The following guide will detail this process for you. Keep in mind that there are two types of share markets you can invest in. These are primary and secondary share markets as detailed below. Number 1. Investing in the primary share market. It is typical for corporations to offer up their shares on a primary share market through a process known as an initial public offering. This means that when one chooses to invest in the primary share market, they can do so through an initial public offering or IPO. To invest in both primary and secondary markets, it is necessary for a trader to have their own Demat account which will hold electronic copies of their shares. Additionally, a trading account is also important which will help in buying and selling shares online. In a few rare cases, it is also possible for a trader to apply directly from their bank account. Based upon the market's response to the initial public offering, a trader will be allotted a select number of shares. Once all the IPO applications are received and counted by the company, those shares are allotted based on demand and availability. It's quite easy to apply for an IPO through your net banking account via a process that is known as Application Supported by Blocked Amount (ASBA). As per the ASBA process, if one applies for shares that are worth 1 lakh rupees, instead of being sent to the company, these funds will be blocked into their bank account instead. Once you receive your allotment of shares, the exact amount will then be debited with the balance being released. All applications that are sent to IPOs are required to follow this protocol. Once shares are allotted to traders, they are listed on the stock exchange, and you can begin trading them within about 1 week's time. Number 2. Investing in the secondary share market. The secondary market is usually what traders are talking about when they refer to stock market investments. Curious about how to invest in stock markets as a beginner? Here are a few key steps toward doing so. Step 1. Similar to a primary market, a secondary market also requires that you have your own demot and trading account. This is the starting point to invest in the secondary market. Both of these accounts should be linked to a pre-existing bank account for a seamless transaction. Step 2. The next step is to log into that trading account. Then go ahead and choose the shares that you wish to sell or buy. Ensure that you have the requisite amount of funds in your account that can help you buy the shares. Alternatively, if you wish to sell, make sure you have the right number of shares before you choose to sell. Step 3. Next, decide the price at which you want to buy a share versus sell it. Wait for the buyer or seller to reciprocate to that request. Step 4. Complete your stock market investment transaction by transferring the money, shares, and you will receive money, shares. As detailed above, the steps for how to invest in stock markets are very straightforward and simple. Ensure that you are mindful of the time which you wish to remain invested for and the financial goals you want to achieve from your investment. If you like my video, then subscribe to channel, so that you do not miss any of my videos. Thank you.